The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. Thank you, Steve, for kicking us off here at TFNN. First hour of the day, 9 o'clock till 10. Second hour, 10 till 11. I fill in the third hour, 11 o'clock till 12. Larry Pesavento comes on special show always on Thursday to noon until 1. This is Eastern time, of course. Then you get Daryl Martin, Diagnostic Trading Hour. You get then you get Dave White. Oh, happy birthday, Dave. I know it's not the day, but it's right in between. Or it's the next best thing you can do. Day before or day after, but happy birthday. And then we get Ken Shreve, and Tom O'Brien wraps us up here at TFNN. So let's look at the numbers. Now, I say let's look at the numbers. I just came from an eye exam. Hadn't been for a while. It's one of those regular checkups. Dilated. Drove back okay. Hopefully I'll be good for tennis this afternoon. A little fuzzy right now, but I believe I can see that the Dow is up 7 at 14,084. And the S&P is up S&P is up at 1515. The composite index is up 8 at 3170. What is Apple doing? Apple's up 89 cents. Woohoo! At 445.53. You've got gold down 12. You know, we got out with a little bit of a gain for our gold stock that we bought. I did a lot of work on this. I don't know if it's ready, and the dollar is continuing to hold really well. So this is a very interesting time. This is unusual. You know, usually when the dollar's pulling back, the market goes higher. When the dollar rallies, it's usually because it's a change of trend, and you would see the market moving lower. But you've got Bernanke standing back there. And he is, in fact, the tsunami pushing to say, hey, I want you in stocks. I want you to feel good. So that's what we're doing. And we've got gold at 1583, silver's down 29 cents at 28.65. Platinum's down again, 1588, and you've got copper at 3.5. Whoa. Oil is down at 92.33. Hey, let's take a look here for a moment. Let's go to the XAL. What is the XAL, I ask you? XAL? Whoever talks about the XAL? I always talk about it. It is the airline index. It's making a double top. With the most recent high that you can get was 2010 or 11. 50.66 in November of 2010. Slumps down to 27.48 October of 2011. And now it's climbing back. It hasn't 50.45, 50.52, and the old high, I've always got to go back to check, 50.66. So it's just got like a half a dollar to go, and it breaks out into new ground. And if it does that, 57 will be the target in the monthly chart for the XAL. Now, who would have thought of that? I remember years ago, Tom picked me up at the airport. I had been recently, I was fairly new at TFNN, and we had to discuss some things. And he come down, picked me up, and as we were driving, we were talking about the airlines, because the airlines, there had been about 2 airlines at least in the last year, probably 3 in that particular year. And he said, airlines, he said, their business plan is to go broke. Well, there's been a change, and they finally found out that if you can do what the politicians do, they say no new taxes, and then what they do is they raise all the fees. So you say, okay, taxes only go up a little bit, and then you look around and the fees, your registration for this, your license, your whatever it is, fees are going up. Well, that's the airline. They've got a fantastic program. Under the worst conditions, you could have the worst bear market. They found a way to at least change the game plan that they had before, so that even if they had to give you perks at least one of these things that they've implemented, whether it's an extra bag or whatever, they found a way to really build up a balance sheet that is completely different. That's not to say they can't go broke, but now they're actually being bought out. Now you're going to get to the situation like the automobile companies, anybody, like here in Massachusetts back in 1920s, 1930s, there were hundreds and hundreds. I wouldn't be surprised if it was over 800 automobile companies. And in fact, there were thousands of automobile companies. And then eventually you got what? 3? And now basically you got, well, you had 2 because one was foreign owned. And now it's kind of a mix. So isn't that interesting? Whatever happens in whatever medium it is, eventually it comes like a pyramid. You got the mass, like the computer companies, hundreds and hundreds, and then all of a sudden they come down to just a handful. So the airlines are different, and they will benefit if oil can come and pull back. Now in the den, there's a question here, JCPenney, not a question, statement. JCPenney going away of Montgomery Ward. You know what's fascinating? From, I don't know if I mentioned this, I was in a JCPenney back in the fall of last year, and it was so shabby. It was up in Natick, at the Natick Mall. It was, I yelled out, anybody here? There was nobody, nothing. The floors hadn't been washed. It was really, it looked like a toilet. I went in again at Christmas time, and they just started new campaigns. It looked so much better. And then I went in again about, I can't remember, time flies, maybe 6 weeks ago. And they had completely changed, really different. And the ads that are coming on, clever ads again. I wish this guy the best of luck. I don't know how we can turn it around. There's so much competition. But they really have to. I have a completely different attitude about JCPenney. Only an attitude. I still don't actually shop there. Although when I was there, the last time, I really did look at a couple of things that I thought were fabulous. In fact, they had a product line that I was looking at other stores that didn't have it. So I wish this guy the best of luck, JCPenney, but I don't know how they can do it. But definitely, I think they are back in their, the talk hasn't yet led to the momentum, but I think they're building some talk there. Okay, final thing that we're going to look at. Bonds are up 730 seconds at 145, 7 ticks at 145 and a half. And and the bonds, I got to mention the dollars at 20 cents at 81.87. Whoa, bunch of callers. I didn't even look around. We've got Mike in Pennington, New Jersey. Hi, Mike. How are you?
Good, Basil. How are you doing today?
Oh, go on. Did you ask about JCPenney as well?
Yeah, I have.
What a coincidence.
I bought the puts yesterday before the earnings announcement, and I'm holding them.
Oh,
and I think it should break below 1650, but didn't want to do that today.
Yeah, what a coincidence! I really had not seen that you called in, and I was looking in the den. It was mentioned JCPenney going the way of Montgomery Ward, so that's why I picked up JCPenney.
Right.
So, wow! Now let me I've got a chart up here. Now I don't know if you can see it. If you're looking at Tiger TV or Tiger.mobi. You will see that I've notated JCPenney, and that notation has a peak D. Just let me put the down arrow. Let me just look at that closely. That was the 22nd of February at 2310. It had made the previous peak was a peak G in the ChapmanWave. Then it pulls back. Oh, and I do have a funny story to tell about these alphabet letters, if I remember sometime today. And then it pulls back. So the low was the 16th of November at 1569. It runs to 2169 on the 19th of December. Pulls back to 1736 on the 14th of January, and runs to peak D just fractionally under the 200 period exponential moving average at 2310. Gaps down today, and it goes down to 1657, and you say you have the 16 and a half. Well, you have which puts?
1850 and 20.
Okay, this is really tough because if you look at the chart on a weekly basis, you will see these horrible plunging red bars right from the it actually started from the top at peaky back in the week of the 10th of February a year ago. And then there were some very ugly red candles on the week of the 2nd of March. Terrible from the 200 period moving average. It plunged. The week of the 18th of May, 34.99 goes down to 25.34, continues lower, has a bounce. Then you get that inverted Roman candle, which doesn't get filled at all. That was the week of the 21st of September, right on the 200 period moving average again. Then there are a whole bunch of candles. I would not be surprised if this candle that we're looking at right now is the low that we're looking at 1657. You know what I'm going to do? There's a whole bunch of stuff that I can talk about in terms of the chart formations, but I'm going to make a recommendation. Do you have enough to take some profits, or have you taken anything off at all?
Well, yeah, I have 3 puts, 2 1850s and 1 20. 119.
Oh, 119.
Okay,
so
double my money on that one.
Yeah,
and
you know what I'm going to
recommend
recommend something here, and I'll explain to you why. When you see a stock that makes these very sharp plunges, I'm trying to think. AZO is one of those. It had a whole series of negative action, and then all of a sudden, the plunge of the 26th, that was yesterday, 3 days ago, that did not stay at the low. It came back because there's a certain point where the psychology of plunging gets worn out. So here's what I'm going to recommend. You've got 3. Because if you took off 2, now, I want you to think about this because you've done a fabulous job. You did the trade. I don't want to influence your thinking because from the tone of your voice, you're expecting that JCP, which is what we're looking at right now, is at 17.33, down 3.84. The candle that's forming as of right now is a candle that I call the Roman candle. If this candle doesn't go, the body of the candle, which is at 1734 with the low today of 1657, doesn't start going down by I would say between 120 and 240. Well, no, 120 and 140. That's 20 minutes to 2 Eastern time. If this is not going back underneath $17.07, $17, but instead is starting to trade at 1753, I would not be surprised if the puts start to shrink dramatically. So I'm going to make a suggestion before the break. You think about it, then I'll come back with the break. I'm going to give you what I would be doing. And the easy thing is to say, grab your money. That's a fantastic trade.
Yeah, I was going to do that this morning, but they lost $500 million, so I held on.
Yes, so let me think that through, and I'll come back with an answer based on the weekly chart as well as the daily. I'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, folks. We're back. Now, Mike, I looked at this. I would not be surprised if it has a pretty nice bounce before it does any retesting. Now, you've got a really good feel for the stock. You've done very well on the puts. I would suggest you can think about whether it's 2 or whether it's 3, whether it's the 18 or the 16. You can decide which ones, whichever ones of the 2 that you have that are the same and one that's from a higher price. Right. I personally would say, you know what, that's a fantastic gain. It doesn't happen very often in the option market. I would grab the profit. I would have done it just like you said right at the very beginning of the day, and then you overthought it, thinking, well, they've got this incredible loss, etc. Take what you can, and then just organize your thoughts so that if it bounces, JCPenney bounces, let me see, JCPenney, I'm looking at the 15-minute. So maybe take 2 off. If you want to keep 1, that's fine. And if it drops down to 15 afterwards, you're in the 1. You say to yourself, geez, I could have made much more. But what if it suddenly picks up steam and it goes to $17.81, which is the 9-period moving average in the 15-minute chart? You're going to see that premium shrink to, it's grab what you can in the options market.
Like hotcakes. Yeah.
What?
They're like hotcakes because they expire tomorrow.
Grab it while you go. Oh, I didn't realize. Oh, grab it. Yeah. That's great. What a good eye. You did a great job. You know what? Now that you're getting a feel for this particular stock and you've done successfully on it, you will find you'll be able to repeat that at least 2 out of the next 3 times. You do the weeklies. In this case, it worked out fine. I would say, you know what, you could even do it again. Keep your eye on it. Grab your profits. Fantastic trade. It could have been a little bit bigger if you took them right off at this morning. I didn't realize they were expiring tomorrow. I shouldn't have kept you on the phone. So take what you can. If you want to keep one, that's fine. My suspicion is you're going to get the best premium right this very moment.
Right. Well, it's still low. Yeah.
While it's still low, and really, that's a fabulous gainer on options. Congratulations.
Thank you.
Thank you. I appreciate it. Hey, call me again just before you're about to do it, because I'd like to be watching
I have an
you.
order to sell one in now. It's got $20 above where it's at, so we'll see what happens.
Oh, okay, very good.
Yep.
And you had another question? You want to look at gold? Okay.
Yeah.
Are you looking at the gold contract, or you're looking at the GLD? What are you looking at?
The gold contract, the April futures.
Okay, so let me go to the gold. This is GCJ, I believe. April. Let me get out of that. There we go. And let's look at this. GCG. April. Okay, here we go. So the 120-minute chart. Now, this is a very interesting chart. I had a call the other day when I was doing Tom's show, and I think it was Joe in Boston. Yeah, Joe in Boston had called me. Thinking about it, I lost the data wasn't coming through. It usually is very good. I don't know why at that particular moment it wasn't. And then I think I went to the gold, and he was looking at the silver. But I did the gold. The gold contract made a low on the 20th at 1554.30. It then ran up. If you're looking at Tiger TV, you will see the MACD, that's that line there. The green line's a fast-moving average. The red lines are slow. You got the slow stochastic, which is this one over here, which went positive, went negative, went positive. But all the time, gold went to higher peaks. It went to A, B, C, D, top at on the 25th at 8 o'clock in the morning at 1594. Then it reversed down just for 2 bars, held the 9-period moving average. The MACD was still very strong. Then it ran up again in a peak A, B, C, and then it had that sudden spike on, that was the 26th of February to 1619.70, just underneath the 200-period exponential moving average, but within the confines of what I defined, and this is what I'll be teaching in my Master Trader Series review and new things. It's called the Level 2, but basically it's really just a refresher course, and I'll be doing that March the 9th, Saturday, 8:30 to 5 at Babson Executive Conference Center in Wellesley, Mass. Now, there's a left side, and let me type it in so that you can see. Left side, right side, with a beautiful thing I call the inside wedge. And that inside wedge gave an angle that said that by 6 o'clock on the 26th, there should be a test of the high of 1618.80, which is the high on the 17th. Well, it came in 2 bars later. It went to the exact price at a peak D, and then it pulled back. And now it's in a downtrend, and I'll talk about that. Do you have a position, or is this a question on something you want to do?
Yeah, I have puts on the GLD, and I have the DUX, and I have the TDX.
Okay, so let's take a break. We'll be right back with Mike in Pennington, New Jersey. We're talking about...
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're on with Mike in Pennington, New Jersey, and we've got a bunch of emails waiting in line, so let me do this. I'm going to tell you what I'm looking at in the 120-minute chart. In the 120-minute chart of the April gold, there's a left side, right side price time match which comes in within the next hour or two, but that's all the way down at 1569. I don't think that's going to happen. So the resistance I'm looking at is the MACD is still very negative. Stochastic's getting to 12%. That's the area where it should turn around and make a V-shaped bounce, but the way it's looking now, especially with the on-balance volume coming down, my suspicion is it's going to test the 1572 to the 1569 area by tomorrow or Monday, number one. Number two is, if it breaks 1567, this is gold itself, the April contract, 1554 by early next week would be my target, and that's going to be a really big test. And this is all based on the 120-minute chart. The weekly chart is the one that I looked at, and that's the reason why I said the gold trade that I had was going to be just a trade, and that's exactly what it was. The reason being the weekly chart is so poor that I don't see any strength yet, and even if there is strength, it has to still make a retest, like a successful H pattern. So I'm looking at that, and just real quickly, I'm going to say in the GLD is exactly the same pattern. There's just a difference that the GLD monthly and the at gc.p and the gold monthly are just a little bit different in the chart formation. Not enough to make it a big deal, except that the GLD is pulled back a little more than the actual price of gold. And the GLD, to me, I've had this target for a long time, and that's the 148 support level on the GLD. That's my target. I suspect we're going to break under it by a little bit, and the bar that breaks under it will probably try to get back in. And my guess is that we're looking at late April, early May as the time where gold actually has a pretty darn good rally. And that's where I actually think the stock market is going to have a much deeper correction. So I hope that helps you. So I just need to say, upside resistance on the GLD is between 154.5 and 158 is really strong resistance. So hope that helps you.
Yes, it does. Thank you very much.
And congratulations on the put trade. That's great. So, folks, let me just do this. I want to do a quick review. I've got a question about Amazon. I've got a question about Celgene. And then I had a number of questions. When I give my market, I haven't given my market overview. So let me just do this for 1 second. Yesterday, we were short what I'd call one of the worst companies out there that used to be one of the great companies, and now I think it's not one. It isn't the worst. I have no idea if it's the worst, but it's in the category of really poor, and that was Sears Holdings. Well, it turns out that we took a 1.10 loss on a $44 stock. Not a big deal. The upsetting thing is they came out with they squeaked above our stop yesterday, and then closed quite a bit higher than the stop. And then today they came out with earnings which are supposedly a lot better than people thought, and it spiked. Sears Holdings spiked up to $48.95. It's trading now at $44.83. That is really ugly. Oh, I forgot to put the stock in right here. SHLD. So I thought it was. I took it personally. I thought it was thumbing its nose at me. Of course, you must never take things personally. But most importantly, I was very impressed that they came out with these earnings, but the market is not impressed. Look, it went to a peak D at 49.18 on the 20th of February. This is a rogue wave. I fell victim to a rogue wave in the ChapmanWave. The rogue wave is where the stochastic and the MACD are failing, and you're correct in being short, and then out of the blue, there's a spike. Usually the spike goes just a hair above the previous high, in this case 49.18, hangs around long enough for the shorts to have to cover, for the new buyers to come in and say, oh my God, I was wrong, it's a great stock, it's breaking out, and then the same bar that makes that high plunges to a low and then continues down on its merry way to the downside. Unfortunately, I have my opening call is just once a day. I wasn't here. In fact, I was out at the getting my eyes checked. I'm looking at my eyes and they're popping right out, saying, "Oh my God, look at that! This is a beautiful bearish candle that we're looking at right now." So it happens. Now, enough with that. Let's get to the real issue, which is the market. The way I'm reading it, it's really important. I've got the Dow breaking out to a brand new leg A. The previous A was an A minus. That was a failure pattern. It's very unusual. But in fact, the bar that makes the low gets a little complicated here. There's all the stuff, all the rogue wave, all of this is what I teach in my Master Trader series. The rogue wave that made that 14.081 high on the 25th came down to 13,784.01. The next day's candle was 13,784.17. That essentially creates the turnaround, the V-shaped bottom that you've got to get to start the next move. So this one here is an A minus. I can go through hundreds and hundreds of times that the Dow has made D's, E's, and F's over the last, thousands, over the last, maybe 1,000, over the last since 1920. It's probably more than that, in the daily chart. And this is one of the few times I've seen this particular pattern. Doesn't matter. The fact that it broke out to a brand new leg A is actually a very big positive, technically, in the ChapmanWave. But here is what you've got to think of. In the S&P, unless there is confirmation. You can't have the general lead the troops if the troops aren't following. It's just, well, maybe in the old days it happened, and maybe that's why they found the bones of King Henry, who was it, the King Richard, that they just found in England. Those days are gone. Long, in fact, I think he was the last one of the kings that actually went out into battle. Generals really need the troops to follow. So S&P has to break above the double top at 1530.94 times 2 on the 19th of February and the 20th, exactly the same price point and high at peak D, which made the head. And then we got the beak of this ChapmanWave stalk leg pattern. And as befits this particular pattern, once the beak is concluded, you get a very strong bounce. At that point, what I always say is now you're on your own. That particular waveform is complete. You're now on your own. You have to think of it in a different way. However, what is needed is for the S&P to, it doesn't even have to close. It just needs to break above. It needs to hit 1531. And that will say, great, now we've got the Dow and the S&P in sync and a new buy signal, which should go to a buy mode, going to at least a peak D, number one. Number two is, in this particular pattern, if you look at the 120-minute chart of the S&P, yes, it's had a really nice move, and there's this pattern that I call between the stochastic and the MACD that I call the squash. What it says is the stochastic ran in a certain pattern, the MACD ran in a certain pattern, and the torque, the velocity of the move up from the stochastic takes it to at least a peak C, and then the momentum, the fast-moving average of the MACD has to take over. With a differential between that 9-period moving average differential, you can see those big green lines right there in the 120-minute chart. That's very positive. That's at plus 2.63 in the histogram. This little line that goes right across there is called the histogram. See the little red lines at the bottom? That's on the way down. Now, I can't remember. I have to call my good friend and wonderful engineer who does all this stuff on TradeStation, all these different chart patterns, done a lot of work for me, to ask him if he can remind me again how to get those as a different color, gray and red, because I like to put volume as well, and the volume's the same color. In this case, the 120-minute chart doesn't have the volume, and it's saying that it's still very strong in the histogram for the S&P 120-minute chart. That's why every pullback leads to buying. This is the psychology of the stalk leg formation. It's where there's a panic to buy on every dip. And I don't know if this is going to continue, but look at the NYA. The NYA, that's the New York Stock Exchange. That's the same thing. It needs to push much higher. I don't really need the NYA to confirm, but I definitely need the S&P. Now, the IWM is also lagging, and this is what I said to subscribers this morning. It would not surprise me if in this move the Dow goes higher, the S&P is dragged higher, they both complete some kind of a peak A, B, C, D over the coming 8 to 10 days. This is even with sequestration, whatever it is. But the Q's lag, QQQ, the Q's lag, and that's the reason why bonds are holding up so well. This telling you, and the volatility index is still actually, it pulled back sharply, but it's still at 14.77. It's over 2 points above the last low. So my suspicion is we're coming into a time frame, probably the second week of March. I would love it to be then, because it coincides exactly with my next Master Trader series. Whenever we have these, it's always at really critical points, and we can look at the chart patterns to study for the next many weeks, sometimes even months. So this says that the Qs probably will only just barely make a double top near the 68.26 area. The IWM will also make a double top. The S&P will make a new high. The Dow will go to an all-time high. And as it's celebrated across the news media, that's where we're more vulnerable to a timeout that lasts longer. I'm waving my hands because I feel quite strongly about this. The whole thing fails if by Tuesday morning the Dow's back at 13,850. Then I'm saying, whoa, these are aberrations for the Dow. It's just an unusual pattern. But the S&P confirmed, the IWM confirmed peak F, the Qs have confirmed the peak F. I have to go with those as the broader measures. It's just the Dow that's benefiting, and right now the Dow is actually a tad weaker than the S&P, but it did benefit very strongly from the Bernanke comments. So let me just summarize it. I believe that the Dow will go higher, and it'll be led by a few Dow stocks, one of which I hope is one of them that we have, which is acting really well. It needs to act a lot better. But in the meantime, back at the ranch, what I really am looking at is I'm looking at the strength of the TLT. And it is strength, even though it's not much from 114, 115 area up to yesterday's 119. But believe me, for the pressure that was put on the market, rallying like that, the TLT should be in the 114s. So I'm suspecting that I'm looking at all the indications right now to say, got a nice trade going on. Treat it as a trade. Don't overthink it. And that the volatility index is still going to be a benchmark for you. And the VIX, VIX.X, which is trading at 14.74, unless it breaks into the 12.80, under 13, closes under 13 in the next 2-3 days. Actually, it could still do that if the Dow goes higher. But I've got to keep my eye on it because the weekly chart, just a couple of days ago, it looked like the weekly chart was going to break into the 2111 area on the VIX to close sharply right up against or above the 200-period moving average. So far, it's failed and has plunged to the downside. So what am I keeping my eye on? I'm saying that the dollar's action, the three bears, Dolly, VIXI, and Bondi, are actually holding pretty darn well. And it's saying that this is a move that's based on fund managers believing that if the Fed is going to keep interest rates low and they're going to push money so that the market can benefit, they want to be in. And they're going for the heavies. They're going for the stocks, the most recognized names. So that's what I'm looking at. And I believe that we should go high in the Dow, just above, going towards, at, or just above the previous high. If this is leg A and there's still to be a peak A and then a peak B and a peak C and a D, we're probably going to break that old high. But this is the period where it's very selective, and I need to see the other laggards, the IWM, the New York Stock Exchange, and the Qs respond in kind. If it's only the S&P and the Dow that are acting very well now, you can't have the generals moving ahead of the soldiers, especially in the year 2013, where most generals are, well, let's just say that there are a lot of generals that are more politically inclined than militarily inclined. So let's go to, we're done with that. Amazon, AMZN was the next question. Amazon is, in fact, acting, it's digesting the huge gains. I have it as peak C in the weekly chart. There is a chance that I really should treat it as an A, B, C, D, a peak D as an alternate wave count. And I will do a little bit of work on that in the break. Meantime, I don't think that Amazon is going to do all that much to the upside. I think it's in a consolidation area. And I think it's going to make lower highs and lower lows for a little bit because it's had a fantastic run. I'll be back. Basil Chapman, 877-927-6648. Dow's up 13, S&P's up 2.58.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern. on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Yes. So, Amazon. So, basically, what I'm looking at in Amazon is, if I can just change the symbol right here, Amazon to me looks like it's in a digestive phase. The stochastic of the monthly is at 83%. The MACD is still good. Over the last 2 days, I would have expected that Amazon is a stock that would have rallied very sharply, and it didn't. So in my renaming, which I am doing right now, of the notation in the weekly A, B, C, D, I'm calling this D to be conservative. I'm going to call this D, the last peak that was made. Everything seems to fit perfectly. If it goes high, that's fine. It'll be E. But 284.72, it's hugging the line period moving average in the weekly chart. The candle that's forming, if this candle forms as it is right now, and even if it goes just a tad higher on Friday, says that at any point in the next 2 weeks, if it starts to trade at 259.50 to 258, it's at 264 right now. There's a real good chance it's going to test 255.73, the low of this week, and break it. And then I suspect it's going to come down to the 252 area. So this might not be one of those that participates very well. Now, the upside says, yes, it could bounce. It could make another arch formation, and 268.69 to a maximum of 274. I don't think it's going to go there right now, but maybe it will. So if you're long, stay long. I would put a stop in some part of my position at about 256. And if you are thinking of going short, I would say I wouldn't short this until it showed signs that it was starting to break 262, and then you've got to watch that 254 area, to 256, 254 area. What would I do right now on Amazon? I'd say there are other stocks that I think are acting much better, and if you're in a high-price stock, Priceline's giving back some of the gains of yesterday. It made a big spike and it's down. I would be very selective. LinkedIn is probably the one that's the safest in the high cap stocks right now to be looking at because it's doing so well. So I hope that answers that. Now, Celgene, I had a question on Celgene. This Celgene, I look at the stock, I shake my head and I say, it was months ago that you were looking at Celgene and you looked at it as a potential buy and a potential even a long-term buy and hold. And lo and behold, that's exactly what it's done. It's a fantastic stock. All I can say is if you're long, right now it's in leg E. I'm pretty sure it's going to bump into resistance at about the 104 to 106 area. I think 104 to 105. But it's acting really well. The support is very strong between $100 and $98. At 90, if it goes to 97, starts to break, be careful because I would have a left side time price match which says somewhere in the somewhere very late March it could actually start to come down. And if it comes down and finally has a bit of a breather, that breather's going to take it under 97 and somewhere around the 95-ish, 93 area. So stay long. Raise your stop and at least a portion of this if you're long. It looks great. The monthly chart is just spectacular, but I do have it in a potential leg F. So that was that. Got just moments to go. There was another question. Let me just figure out what the question was. Oh, the question was, in my analysis of the Dow, where did I start the new leg A up? These are for people who really understand the ChapmanWave and why certain things happen. There's no other way that I can count that as a peak G at the top of 14,058 on the 20th of February. Why? Because it plunged and it went down to below everything on the left side of the body at 13,860, 13,852. So the low of 13,784.01 has to be the start of a new move up, and that's the way I'm keeping it for now. It will fail if the Dow breaks at 13,900 level. So, the monthly chart is still in leg C. Tomorrow starts the fresh month. I have to wait for the day to conclude. I'll do the monthly tomorrow for the question in the den. Thanks for being here. Stay tuned for Larry Pizzavento and all the other shows this afternoon, and I'll be back